we'll really see where we end up after a couple of days, where the conversation goes into details that come out, certainly of COP29. In fact, a perfect guest we have right now to talk us through that and where they plan, of course, their businesses and really what happens there. Does that affect them materially, short and longer term? Joining us here instead is Jonathan Beck, Group Chief Finance Officer and Chief Strategy Officer at ACEN. The company, of course, is one of the leading renewable energy companies in Southeast Asia, and its power business is of the listed conglomerate Ayala Corp, of course, in the Philippines. ACEN does aim to achieve 100% renewable energy in its generation portfolio by 2025, which is next year. Jonathan, nice to see you, sir.
You too.
Let's start with COP29.
Yep.
In very simple English, how does anything that comes out of the fine print there affect, how you guys plan your business?
Well, we want to be a leading participant, not just in the development of renewable energy, but also in finding pathways for existing thermal plants to be retired. We still have effectively economic interests in a thermal plant in the Philippines, and we're engaged in a venture at the moment with the Monetary Authority of Singapore and with the Rockefeller Foundation to find a way of using transition credits to bring on the early retirement of that plant. But ultimately, and the COP29 is being described as the finance COP, I think, a lot of people. And ultimately, money is what is critical to enable the retirement of thermal plants and also to enable new renewables to be built instead of thermal in many of the, particularly in the developing countries where there's still an enormous increase in growth for electricity demand.
Yeah, talk to us about that. Would you say it's easier now than it was 5 years ago to finance an early retirement of a coal plant, particularly in Southeast Asia, where still the energy mix is still, a lot of that is still coal, for example?
No. For sure it's easier now than it would have been 5 years ago. I think of 5 years ago, there was a lot of people were kind of still feeling their way through in many respects what was really going to work. But we're now getting to the point where we're seeing concrete steps being taken by governments bilaterally. Obviously, there's still a ways to go, it seems, before we have a true marketplace for carbon credits and transition credits, etc. But ultimately, we still think that that's one of the right things to do. And we know that there's a lot of controversy around it, etc. But ultimately, if we want to make these push forward, we're going to need all of these mechanisms in place.
And the path, you think, is clear and agnostic of, say, governments, for example. And the reason I bring that up, Donald Trump, for example, we're not sure, of course, what he's going to do. But how do you gauge that risk over the next 4 years with the Trump White House, for example?
Well, frankly speaking, we do think that there are a lot of governments in this world, not just the United States government, obviously, and we're seeing a lot of actions and initiatives on the part of many governments, particularly in this region. If you look at India, for example, where we've got a pretty rapidly growing business, the government there, as you may know, wants to get to 500 gigawatts of renewable energy by the end of 2030, which is a very ambitious goal. In the Philippines, the government wants to get to 35% of renewable energy in terms of the mix of actual output, but also by 2030. Australia has targets to get to over 80% of non-fossil fuel generation by 2030. These are all very ambitious goals that I think honestly are somewhat independent of what happens in relation to US government policy. Because each government, each economy has its own reasons for moving forward in this way. We don't think that stops for the next 4 years, let me put it that way.
Right. You guys have big plans in India, which I want to get to in a moment here. But just talk us through your blueprint right now, and I think you have a broader target. 2030, I think it's 20.
We want to get to 20 gigawatts by the end of 2030.
Okay, where are you now? And looking at next year, where do you think you'll be at the end of next year?
Right, so we are right now at about nearly 7 gigawatts when you look at what we've got in operation, under construction, and what we call committed projects.
Okay. Which is part of the 7, or is that outside?
That's part of the 7.
Okay.
So we've got 3 gigawatts operating today, and then The rest is either in construction or very soon to be in construction, which is why we call them committed, because we've got board approvals and the funding is lined up, etc. By the end of next year, we would expect to be probably about 8.5 gigawatts in terms of the entire portfolio, including what's under construction. And frankly, the graph will start to steepen a little bit as we get towards the end of the decade. It's not that gigawatts, so to speak, are everything. There's a target that is not carved in stone, but it's an aspiration for us, a North Star, if you like. Because the truth is that companies like us should be doing this volume and more if we're actually to achieve all of the target goals that the governments have set, including the governments in the markets that we operate in.
Let's get to financials then. So 8.4 billion pesos, I believe, first 9 months of the year.
8.14.
8.14 specifically. Yep. That's a 20% jump over 9 months. I mean, is 24%, is that the norm that we should expect from the company on an annual basis? So next year, for example, where do you think it'll be?
Next year might be a tad lower than that, just because as you bring projects into operation, you get a lot of depreciation effects that start to come through. It's
that non-cash headache.
The non-cash headache. But if you look at our EBITDA line, we would expect it to grow at that rate and more, to be honest. As we plan out what we see our capacity doing over the next several years, we would expect, though, that the net income growth rate will be comfortably into the double digits, consistently year over year, with a CAGR between now and 2030 that should be, frankly, higher than what we've just reported for that 9 months to 9 months. But again, a lot will depend on how rapidly projects can be brought into construction and operation. I mean, as you know, it's not easy bringing very large-scale projects into being.
Especially in the markets where you operate as well, which is, I guess, that's another conversation I guess we can have in the future. You're making a lot of money. The question I have is where you want to be, say, in a couple of years' time. Also seems that you will need to raise some money at some point, if not early next year. Correct me if I'm wrong. How much? What's that cash call looking like? Or is that debt or equity or a mix of both?
Well, we'll obviously continue to focus on debt financing, particularly project financing at the project level. For the bulk of, in a typical project is kind of 2/3, 1/3 debt equity, especially and particularly where it's got good offtake, etc. Our equity requirements, though, don't go away. We would expect to raise equity in calendar 25. Not sure it'll be in super quickly in 2025 because we don't yet have quite that pressing need. But I'd say by around mid-2025, that would be that would be likely for us. And in terms of quantum, we've tried to be pretty transparent that we see it somewhere in the sort of around the $500 million mark. And we've got existing very large shareholders, especially Ayala Group at 58+%, who are looking, we believe, they tell us, to put more money into the company.
Well, yeah, one would. And do you think that would normally be, would that be within the existing shareholder base, or is that going to be open to? Have you looked at the details of that yet?
To be decided. But for sure, we know that we've got large existing shareholders, especially Ayala, that want to put more into us. So we'll need to align on the best mechanism for that.
Very quickly, India, very quickly, what should we expect from the company next year? What announcements?
We're already seeing a lot of growth in our Indian portfolio. There'll be a lot more to come in the future. We think it's a very exciting market, not just because of the government's targets, but because of the significant growing appetite, just growth in electricity consumption there. And India is very well suited to renewables, both solar and wind.
Jonathan, thank you so much. It was great to speak with you. Let's do this again. Maybe when you do cash call.
Let's see. My pleasure.
Let's do
Thank
that.
you, David.
Jonathan Beck there, Group CFO and Chief Strategy Officer at ACEN.